Disclaimer. This podcast is for FCA authorized financial advisors only and is not for retail clients. The views expressed in this content and all other content on this channel are those of the individual speaking and do not constitute financial advice or a recommendation to invest in any product, asset, or strategy, including those discussed in sponsored segments. This content is for educational purposes only. Always do your own research and consider all relevant risks before making any investment decisions.
The top 1% of the country pay something like a third of all of the tax. Raising taxes isn't really the answer, right? What are your thoughts on it?
You could say we're 75% communist. I mean, it's beyond belief, really.
I'm giving you hundreds of millions a year or whatever. You should be dealing with this, and the government have proven
that, and just the money printing generally is, I think, the main reasons for
the wastage. I think that we have in our government now it's just absolutely bonkers.
Rachel Reeves did say in her warm up to taxes more speech, she wanted to get productivity up, but then that just has words to me if you look at the actions.
You said something about protecting yourself from the devaluation of the pound.
That's a bit of a flag that the time is getting near, that you really need to have this.
Well, where does the UK go if, unlike all other countries, we can't just print our way to meeting our debt obligation?
So they could bring that big stick round, so they could walk round everyone's house and they could say...
And actually, we've had a real world example of it, right?
How can we best protect ourselves and our families from...
Morning, Sam.
Good morning.
Welcome back to part 3 of the Robert series. How are you today?
Very well, thank you.
Right, let's dive straight into this one. So as we record, we've probably got a couple of weeks till the upcoming budget. And there were some things I think that we wanted to discuss around that. What are your thoughts?
Yeah, so, I mean, it's worrying, isn't it? So I was listening to a podcast, sorry to mention another one. Merrin Somerset Webb has one, which obviously comes at things more from a sort of TradFi point of view. But she's always been very good, I think. And she had one very recently, maybe a most recent one, with we're talking about the Laffer Curve. Indeed, had Mr. Laffer on it. So they were talking through that, and that's very prescient, I think, because we have a situation where the tax rates are going up more and more, and are likely, it seems, if if rumours are to be believed, that they're going to go up further on the 26th of November. But the purpose, they might defeat themselves, may defeat the purpose. So the purpose seems to be we need more money as government, or the government needs more money. But actually, if the Laffer Curve comes through as it I gather always has done, then it's going to raise less money. And it makes total sense. It's completely logical why that be the case. You put the rates up, so the rate on the same tax base theoretically goes up, but of course the tax base reduces because people decide to, maybe they say, well, I'm not going to do the extra job or the extra overtime or something, so I'm not going to pay as much income tax. Maybe they don't sell an asset they would otherwise have sold, so capital gains tax is lower. Maybe they decide to leave the country. Of course, so and there's probably some other things as well. So all those things reduce that tax base, and so it's probably going to mean that whilst the financial markets are temporarily happy or okay, or not scared, because tax rates have gone up, and therefore it seems to be this baked-in assumption that taxes go up to close the deficit. In reality, it's probably the other way around. So that probably means that then she's coming back again next year and saying we need more tax rates go up, has the destructive effect again, and we're just going round and round in circles. It's quite interesting that on the podcast it was talked about how there was some analysis done in the States, and okay, not all analysis transfers geographically, but he was talking about a federal tax rate of 12% as the optimal rate. Now, I think that's probably slightly misleading because you've got income tax rates at the state level as well. So I'm not sure what those would be, but let's say maybe it ends up being 20 or 25%. There's a long way between 25% and where we are now, or where we'll be after the 26th of November. So that's all quite concerning. but also it feels quite inevitable under this government.
I think that's absolutely correct. Just to quickly explain, if anyone doesn't know, so the Laffer curve essentially shows it's like almost like a normal distribution curve, right? And it just shows that once you reach a certain tipping point, people that you disincentivize working or you incentivize mobility, and therefore tax rates actually go down over a certain percentage threshold. That's obviously going to vary by geography and time, and etc. And actually, we've had a real world example of that, right? So they increased the capital gains tax, or they decreased capital gains last year, I think, and expecting to raise more. And it's actually shown that it's raised less. People have either stopped selling assets, or the very wealthy. I saw some stats. I've seen some stats recently that, you know, the top 1% of the country pays something like a third of all of the tax. But the top 1% in terms of income are generally pretty mobile in this world that we live in now. And so they'll either, as you say, stop selling assets, or they just move. They just go.
Well, a good example is the founder of Revolut, who recently announced that he had moved to I'm not sure, UAE somewhere, Dubai or Abu Dhabi, and Revolut is about to list. He'll probably sell some shares that would ordinarily, if he was living here, incur some capital gains tax. I think the number bandied about was, well, that could have been £3 billion worth of capital gains tax if he was living here rather than having moved away. Well, that's, you know, in the context of the numbers we're talking about, that's a big, big number.
Yeah, absolutely. And yeah, there's some stats on this that I saw from Daniel Priestley a while ago now, so don't trust to verify, but off the top of my head, he was essentially saying that the economies and cultures and empires in history that have done very well generally have government spending around 15% of GDP. So you essentially let the rest of the market figure itself out, right? Because, so, and the example he gives, and this is a really good example, right? 100% of government spending is communism. So I come back to the examples between communism, capitalism, and socialism. So socialism, you have 2 cows. The government comes and tells you to give one of the cows to me. That's socialism. Communism, you have 2 cows. The government takes both cows and gives you some of the milk. And capitalism, you have 2 cows. You sell 1 cow and you buy a bull. So within that example, so communism is essentially 100% government centralizes all of the capital output, all of the capital that the economy creates, and then they distribute it in the way that they see fit. So that's 100% government spend of GDP, essentially. But then is 99% still communism? Is 98% still communism? Like, where do you fall on this spectrum where it stops being capitalism and it starts being communism? That's going to be different for everyone. But right now, the UK is in a position where government spend accounts for somewhere around, I think it's like 40 to 45% of GDP. So they're essentially centralizing almost 50% of the capital creative output of the country, and then telling all of us, we know how to redistribute your wealth more efficiently than you do. And we have thousands of years of data to the contrary. We have many fallen empires that have done the exact same thing, either generally through debasement, right? So like printing more money or shaving small bits of gold off their gold coins, gold plating copper and calling it gold coins, etc., etc. So we have a lot of data to show that the government doesn't do this very well. So raising taxes isn't really the answer, right? The answer is reduce spending. What are your thoughts on that? Hi, team. A quick interlude to ask, what if you could offer your clients Bitcoin exposure on a regulated investment platform? Because that's what my friends at P1 have done. They've created a discretionary model portfolio invested into companies with significant operations in digital assets, available within general investment accounts, ISAs, and pensions, and managed by award-winning investment professionals. With P1's digital assets portfolio, you can access a professionally managed portfolio of listed companies powering the digital asset economy, such as miners, blockchain infrastructure, payment services, and listed companies with Bitcoin Treasury strategies. It's Bitcoin and digital asset exposure built for regulated advisors. It's diversified, actively managed, and with full transparency. P1 created the portfolio for advisors who see the long-term potential of Bitcoin and the digital asset economy, and who are starting to look at how best to facilitate exposure for their clients. It is packaged in a way that fits into an advisor's day-to-day investment advice process. So if you're an advisor who wants to offer digital asset exposure without the operational headaches, visit the URL in the show notes or use the QR code on screen. P1, bridging traditional finance and digital assets, only available on the P1 platform and via regulated financial advisors, and the value of investments can fall as well as rise, and you may get back less than you originally invested. Now back to the show.
I mean, it has to be. I mean, for all the reasons you say there, and yeah, it's worse than the 45% tax and spend from the government, because the other 55% is completely distorted because it uses central bank money, uses government money. So actually, if you think half of every transaction is using government money as things stand, it's probably half of that 50% has been massively distorted. If you're trying to put, it doesn't quite work, the percentages, does it? But it's so you could say we're 75% communist. And then they're surprised when the productivity levels don't seem to be particularly high. I mean, it's beyond belief, really. I mean, I think the trouble is it's a very emotional topic, and people say things like, "Who would build the roads?" and how can you take money away from people who really need it? And I've got a lot of sympathy for that. But it lacks a certain amount of imagination about how it assumes everyone else doesn't care, and it assumes the government can actually do it in the first place. I mean, normally it's when the government is doing something, they don't do it very well. I mean, that comes from making handouts of cash. It comes from running services. So actually, it's
building train lines.
It's providing a below level service to the people who really need it. But the trouble is we're so used to the government doing these things, it's very difficult for people to imagine what would be in its place if they weren't. And I'm not sure how to get around that. I think it's going to have to be. I think ultimately it'll be forced upon the population as a whole.
I think there are certain ways around it. I'm reminded of in ancient Rome, when something needed doing, like a bridge needed building, a generous benefactor would just do it as long as they could attach their name to it. So like the things will get done if you instead of taxing the very wealthy 50%, if you were taxing them 15%, they're going to have a lot more capital and they're going to be very happy to distribute that to help people worse off than them. But if you're taking 50% of everything they already make, they're going to be like, well, then I'm keeping the rest. You deal with the issue. Like I'm giving you hundreds of millions a year or whatever. You should be dealing with this. And the government have proven time and time again, they're not very efficient at distributing money. I'm also reminded of, I mean, to go to the other extreme, I lived in Lebanon for 3 years post the port blast. So they'd already been experiencing currency collapse and hyperinflation for sort of a year, maybe 18 months by that point. And then that just ramped everything up on steroids, not least because the government just retired after the port blast. So for about 2 years of me living in Lebanon, there was currency collapse and hyperinflation going on, and there was no government. So no one was paying tax, but there was also no handouts. There was no safety net. There was no, there was no hand of the government saying, if you fall, we'll help to pick you up. And what that led to, and what I saw, was this unbelievable entrepreneurial spirit. Like everyone starting their own companies, everyone wants to be an entrepreneur, and the very swift movement of money as a consequence, because you had to speculate to accumulate. Now, it was very much too far the other way. So, to the point where there was no electricity. So, there is essentially a mafia of third party generators, leading to noise and a ton of pollution, especially in Beirut. But that also meant things like the externalities that you talk about. So, street lights went off. There was no street lighting after dark. Traffic lights went off. There was no traffic lights at all. Right. So, roads were chaos. I was surprised that the army didn't revolt, to be honest, but I think the US stepped in and just basically gave the Lebanese army money, because the Lebanese army is Christian as opposed to the militias, which are Muslim. So the army was still getting paid, right? So that's an externality. Defense is an externality. Street lighting, health is debatable. Police force, fire brigade, that kind of thing. But I mean, the wastage I think that we have in our government now is just absolutely bonkers. And it doesn't really help that we're paying a ton of interest on debt.
Yeah, it seems Rachel Reeves did say in her warm up to taxes more speech that she said something about wanting to get productivity up, but then that just sounds like words to me. If you look at the actions, they're going to worsen productivity. And I think what that shows, so that, I mean, that's a great anecdote there. Really good, really interesting experience by the sounds of it. And I think we're going to need some of that over here in the UK. We have, the government has spent more money than it could afford. We've now, ultimately, that'll only be paid back through devalued pounds. So it's just a matter of time until the Bank of England has to step in and rescue the government by devaluing the pound, possibly buying government bonds, or however it goes about it this time. That to me feels virtually inevitable. And as a result, it'll look like the government is helping certain parts of society, whereas actually it won't be, because it will be through devalued pounds, or it will be, sort of, I guess, out of desperation for votes. And so I think we are going to have to, whether we like it or not, generally across the population, take on more of a self-responsibility mindset. And that will, I think that means in lots of different areas, but we're talking here particularly about money. So it will need to be about money as well. And so I think it's incumbent on us to, how can we best protect ourselves and our families from the devaluing pound and the implications and the consequences and the destructive consequences of a currency that's falling in value, possibly faster and faster. And the reality is that we can act now. We don't have to wait for the government to tell us what to do. We can act now. And we can, everyone who's listening to this, and lots more besides, I hope, can say, okay, do I have any Bitcoin? How can I, if I don't have any, if I don't understand it, how can I learn a bit more about it? How can I give myself a plan B? Maybe I do mainly carry on using the pound sterling for a while, but how do I set it up so that I can move over to Bitcoin very quickly? If, who knows what's going to happen. I'm not expecting a completely mad panic on the 26th of November, because I think she's probably going to give the markets, say the right words and give the markets what they want to hear, but it doesn't mean it's going to work longer term. So how do you get that plan B in place so you can move over to it very quickly? And I think that applies on an individual level, and I think also applies, thinking about our clients on a corporate level as well, or charity level as well, and a pension scheme level. So how can, if you take companies as a good example, so how can we make sure that the company can continue to operate, can continue to pay its suppliers, pay its staff, look after its staff? I think there's a duty that a company has to look after its staff as best it can. What is going to mean that it can do that? It needs to have the infrastructure in place so that it's either using Bitcoin or partially using Bitcoin, or at least is ready to use Bitcoin if the need arises. Paying suppliers, all that kind of thing. Being able to essentially the Bitcoin circular economy, getting ready for that to come into play. So, and I think a lot of companies, they've got a lot of pressures, right? They're being taxed more. Their staff maybe are still struggling post lockdowns. So there's a lot of things on the priority list at the moment. I completely get that. But looking ahead to the next potential issue or crisis, it's worth trying to get ahead of this and making sure the company is as strong a position as possible. A similar sort of thing goes for charities, because with the government can pay more pound notes, but that doesn't mean that those pound notes will be able to buy more stuff for certain vulnerable groups. It will be incumbent, I think, on charities to step up, and even more than they already have done. And of course, a lot are run on shoestring. How can they step up in that scenario and make people, then whatever their mission is, they continue to deliver in that scenario? Again, they need a robust balance sheet. They need to have protection against on the payment side, coming in, going out, encouraging donations from Bitcoiners and things like that. So I think this is going to be incredibly important over the next few years. It's difficult. It will feel for the moment like it's something that could be put off, and then it will really, really matter. And of course, no one can tell exactly when that really matters, but it will be when the pound starts to lose some serious value. If it drops to, it's 130 against the dollar at the moment. Now, if it dropped to, I don't know, 1, that's a big devaluation against the dollar that itself is devaluing against real stuff. If we see ruptions in the government bond market, again, that's a bit of a flag that the time is getting near, that you really need to have this fallback infrastructure in place.
I would, completely agree with what you've said there. There's a couple of bits I'm going to touch on. So, the companies aspect is a really interesting one. I read a piece the other day about the lobbying power of private equity and how the UK has essentially just sold out to private equity, and that there are roughly 5 million SMEs in this country. And if government just made it slightly easier for those companies, imagine if each one of them could hire just one additional person. And you're like, you've plugged any kind of unemployment, probably increasing tax returns, all of that stuff. And so the attack on entrepreneurial spirit with things like VAT rates and national insurance, all of that stuff is absolutely bonkers. It should be rewarded. And as I say, Lebanon went too far the other way, but in the Middle East in general, they are incredibly entrepreneurial. They reward you setting up your own businesses. Everyone wants to do it. There are very few multinational corporations that employ thousands of people, certainly in Lebanon. So that's the first one. It's interesting that you said something about protecting yourself from the devaluation of the pound. And you could potentially almost go one further there, which is we in the West, and certainly in this country, I believe there is an overarching sentiment / belief in the safety of the government. Like they're don't worry, they're a safety net. They're there to save me. And actually, in most of the world, there is a healthy distrust of the government. So protecting yourself from the devaluation of the pound, I would go one further. Protect yourself from government. Remember that every organism on the planet has one purpose, main purpose, which is to survive and grow, reproduce. Government is no different to any other organization, any other network, right? Which is aiming to self-replicate and grow. So if you want a visceral visual representation of this, we always recommend watching What's the Problem by Joe Bryan. It's always in the show notes, so please go and watch that video if you haven't. I would say it's essential viewing for anyone in financial services and potentially everyone. So yeah, if you want to understand why money printing, government borrowing, government debasing has an almost nefarious input into almost all of aspects of our lives, go and watch What's the Problem. And then the third one I want to touch on, Sam, and I'm unsure if you know this. I only found this out. I actually found it out a couple of weeks ago at one of our Bitcoin IFA meetups, but I'd had a couple of drinks when I was told this, so I'd forgotten it. And then I saw it again yesterday or the day before. This comes from a chap called Edmund Greaves, who presents the Mouthy Money podcast. And he did a great video about this on YouTube, on LinkedIn the other day. One of the issues facing the UK government is that when Thatcher came in, we're still essentially fighting issues, or we have inherited issues from the Thatcher government, so 40 odd years ago. One of the things that Thatcher did when she came in was she tried to be fiscally responsible. And so what she has done is sell a ton of index-linked gilts, so index-linked bonds, meaning I assume the coupon goes up. Anyway, something goes up in line with inflation.
The coupon and the redemption payment both go up in line with RPI, Retail Prices Index.
Right. So what that means is about a third of our bonds react very dangerously to inflation. We're probably the only country on earth that can't fully just print our way out of our debt situation, because a third of that debt increases when we print, which kind of puts them between a rock and a hard place. So actually what Edmund was saying is Rishi Sunak's main issue, because he's worked in the city, he understands, just how dangerous this would be to the UK economy at large. So his main issue was inflation, and Rachel Reeves may understand that inflation is actually the main issue facing the UK, which is why we are likely to see tax rises, because the main way to curb inflation is to stop people's spending power. So you stop making money cheap, which obviously they have limited control over, because that's up to the Bank of England. So if the Bank of England want to continue dropping interest rates, despite headline CPI being 4% or whatever it is, and despite real inflation being much more like double digits, the government now has no centralized control over the interest rates. So if the Bank of England decide that we're going into recession, we're going to drop interest rates, well, then the government needs to curb inflation another way, which is they're just going to overtax so that people don't have the spending power. But I've struggled to understand the hypothetical situation of where does the government go, or where does the UK go, if, unlike all other countries, we can't just print our way to meeting our debt obligations? What are the short, mid, long-term effects of that? Hey team, a very quick pause. If you're a financial advisor, wealth manager, or accountant, chances are your clients have already asked you about Bitcoin. And if they haven't, they soon will. Which is why I've created the Bitcoin IFA webinars. The webinars are designed to give you all of the information you need to confidently talk about Bitcoin with your clients. They're on demand, so you can watch them at a time that's suitable for you. They count as 90-minute structured CPD, and you'll get priority access to the Bitcoin IFA community. Head over to thebitcoinifa.com to book your webinar today. It takes less than 60 seconds. Again, that's thebitcoinifa.com to book. Now, back to the episode.
Not good, but it's not good either way, right? We're backed into a corner, or at least the government and the currency are backed into a corner. So I don't think there's any real escape. It's just, it reminds me of Mises's quote, which I'm not going to be able to remember off the top of my head, but essentially it's saying, once you get to this sort of point, you either continue printing and you have you end up with very high inflation, possibly hyperinflation, or you stop printing and the malinvestment has to be unwound, and you get to actually do that properly, you need a huge amount of all that malinvested capital needs to move to where it otherwise should be. And of course that's a recession, probably a huge recession at this point. And when, at least in the last 50 years, whenever politicians or central bankers have looked over the abyss at what they're really seeing is the impact of the start of this malinvestment moving to where it should be, they panic and print and try and keep that malinvestment where it is. And of course, that's terrible for productivity. That's probably the one of that and just the money printed generally is, I think, the main reasons for the low productivity. It's not rocket science. You're just, capital is not where it should be. So to pick up on some of those points then, so the index linked gilts, I think it's an interesting one. Yeah, so it was, I think Thatcher was trying to, it was obviously on the back of the 70s, what happened in the 70s with high inflation. It gave the financial markets, well, first of all, she had a plan, but secondly, it gave the financial markets a lot of confidence precisely for what you outlined. They said, well, actually, they're not going to take risk with high inflation because they're going to have to pay more, so it would shoot them in the foot. However, I think it's shooting in the foot. It's not shooting in the head. I didn't realise it was as high as a third. I thought it was a bit lower than that. But whatever the number is, it's a material minority of the government debt is index linked. However, that means that the majority is not index linked. So if if we get inflation of 10%, it's still devaluing the 75% or whatever it is, 2/3 significantly. So it's still a beneficial. And then if we look at the index linked gilts, then RPI, as we know, is lower than the increase in the money supply because of the way that the maths works. So there's still a net gain there. And also they've I think it's from 2030, they're changing the definition for RPI to equal CPI, which tends to be lower. It's not guaranteed to be low in every scenario, but tends to be lower than RPI. Obviously, it was for perfectly innocent reasons, like to harmonise. It's got nothing to do with the rate generally being lower, I'm sure. And so that will also help. That gives a little bit of a more sort of wriggle room. So it is still massively beneficial just to print their way out. And so I don't expect that to be, it makes it a little bit more difficult than if it was all nominal debt. But I don't see that being a big enough of a hurdle.
And so okay. So thank you for walking me through that. So yeah, they'll print as much as they can get away with. It just won't be mass. They're not just going to drop a QE bomb like £20 trillion. They'll just have to keep surreptitiously doing as much as they can get away with without leading to hyperinflation.
I think it's the same playbook that it's been for many years. I mean, I don't know if there may be an incentive in them, then maybe the next, when QE or whatever acronym they give it, because they probably can't call it QE, they've got to call it something different. It may be, haven't fully thought this through, maybe it makes more sense for them to buy index-linked gilts when doing that, because they're effectively then taking them off the government's books, or the government's then effectively paying itself, so it sort of doesn't matter what the how the coupon payments are calculated, and that they're linked to inflation. I'm not sure the bank is as independent as you or as Edmund is suggesting either. I think there's
that was me. That wasn't Ed. I don't want to put that on him. That was me.
Yeah. Okay. So I was going to say I thought of something else while you were doing it. So it was that it was actually on this Merrin podcast where they were talking about massively simplifying, essentially putting all taxes into an income tax and a VAT. And then also within deprived areas, this sort of comes off the back of what you're saying about Lebanon. In deprived areas, so you've got an inner city deprived area, just say, right, there are zero taxes within. If you live and work within this area, there's zero taxes. and just let nature take its course, and people are then massively incentivized to work hard, even more so than just having a simple system of two taxes. You also
Wow,
increase
that
activity because you were removing, it's a lot of the argument behind a flat tax. You don't need as much legal advice. Generally, of course, you don't need as much accountancy. And I'm sorry to the lawyers and the accountants, but some of that will be less for them to do, which is then more productive work that can be done instead.
I mean, that is super interesting. I live close to a relatively deprived, dying seaside town of the UK. Had its heyday over 100 years ago, similar to Blackpool, Great Yarmouth, you name them, right? Southend, probably. And I could only imagine what a zero tax within, if you were to live within, a certain postcode would do, because it would drive. I mean, firstly, you'd end up getting more entrepreneurial people moving there, so that the overall demography would change like that. And then you're just going to see this renovation of, let's set up cafes, let's set up pubs, let's set up restaurants, let's set up whatever it is, let's set up factories, let's set up you're absolutely correct. That would be, what a test run that would be. I'm going to speak to my MP.
There were free ports, of course, set up by possibly the previous Tory government. I'm not sure how successful they've been, or indeed I don't know whether they applied the same principle. It was meant to be a low tax area, but I don't know exactly how it operated, so I don't know if that's comparable, and would show some evidence in either direction. But I think but we're not likely to live in that world anytime soon. So I think again it comes back to whether you're an individual, company, charity, pensions fund, even, you need to be taking action, taking self-responsibility for what could be around the corner, and getting, even if it's just listening to podcasts like this, or watching What's the Problem, reading some books about it. One of the resources I often point people to is My First Bitcoin Diploma, which is a free downloadable PDF. If you go to myfirstbitcoin.io, I think it is, there's a drop down list, Bitcoin Diploma, free PDF in pretty much any language you like. So get on board and get comfortable with what's happening, because there'll come a point where you need to move very quickly if you don't act now. Which maybe takes us on to Bitcoin Treasury companies.
I was going to suggest that, yeah. So, what you're describing there is on-chain Bitcoin, right? To be clear,
Yes.
because
Yes.
that is the only form of money or asset in the world that a government cannot take from you, either just take or mandate that they want to take it. I mean, I suppose they could mandate it, but governments can go door to door to find gold.
Yep.
And obviously, if it's paper gold, they'll just go to the platform provider.
The bar is much higher, right? So it's not impossible. Basically, government is someone with a big stick that writes things on paper and says, if you don't do what it says on the piece of paper, then I'm going to hit you with my big stick, or I'm going to lock you up in jail. That, if you drill down, if you boil government down to its most basic, that's all it's doing. And so sometimes what it writes on that piece of paper can be good or benign, and sometimes it can be bad, and sometimes it can be really bad and highly destructive. But ultimately, it's just walking around with a big stick saying, do what's written on my piece of paper. So
that's it's actually something that Joe Bryan, on one of the very early episodes of this podcast, said, which is essentially all government money is backed by violence. I had to get him to describe what that meant, but essentially being backed by the fact that they have a big stick and they can make you do what they want.
So they could bring that big stick round, so they could walk around everyone's house and they could say, right, I'm going to take your telly, I'm going to take your Bitcoin, if that's where you store it. I'm going to take any cash you've got lying around. They can do that. They've got that is possible. It's theoretically possible.
They could turn around and say, "I'm going to take. I want a percentage of your house."
They could
right?
do.
They could say, "Look, you own your house outright. I want 20% of it."
Well, that's effectively one of the potential rumours about what may happen with an increase in council tax on the 26th of November. So they could, but the problem is it's hard work to do that, and therefore it's like, well, how much? What's like cost benefit analysis from the government's point of view as to whether it's worth going around every house with a big stick. It's much easier if assets are centralised, in which case then they only need to speak to a handful of people and then say, okay, great, we're going to take 20%. And the platforms will comply, because if they don't, they'll be told, right, you're no longer allowed to be in business, and they'll probably weigh that up and say, well, we'll just do as we're told then. So that's why Bitcoin in self-custody is not 100% guaranteed that they won't come down with the big stick. However, it just raises that bar of difficulties so high compared to anything else. So that's step one. And I think often, actually, it came up at a conference I was at yesterday, where they were talking on one of the panels about, well, people, it's store value versus using it as a medium of exchange. And generally speaking, if someone's not, if you're not willing to spend any of your Bitcoin, again, we're talking proper Bitcoin here, it's probably a sign that you haven't got enough of it. So maybe that's a sort of sense check someone can apply. But then, of course, you do have, there are trapped pools of money, trapped pools of capital, so pensions, ISAs. There are also investment funds that set up with a particular mandate. And so that's effectively trapped, albeit in a slightly different way, in that they can only invest in global equities, or they can only invest in global bonds. They can't just say, "Oh, we'll sell 5% and buy Bitcoin." They can't do that. So it goes against what they've agreed with their investors. And so that goes back to there's that sort of infamous chart from Jesse Myers many years ago, which has been updated, I think, fairly recently, and it says, what's the global assets across the world, obviously. It comes to about 1 quadrillion or $1,000 trillion worth. And then it breaks it down into, we've got this much in property, real estate, this much in equities, it's bond markets, gold, art, etc. And the logic there is that there's a monetary premium within all of these asset classes. It's going to differ not only by asset class, but actually it's going to differ as well by digging down. So, for example, the real estate is obviously each building is idiosyncratic. It's unique. So there'll be some buildings within that, whatever it was, $300 trillion of real estate across the world. Some of that actually may have very little monetary premium in it. Maybe that's more the commercial property. Some will have a high monetary premium, like residential, and even different between different cities and so on. It'll be different amounts. But the point is that there's monetary premium, as in they're used as a savings account rather than as for their utility value. And there's a natural pressure for that value to move to Bitcoin, which is a better savings technology, a better long-term savings account. Is what I try and that's what I see Bitcoin is, a long-term savings account. Look through the short-term volatility, and that needs to find a way from where it is to Bitcoin. And Bitcoin Treasury companies are one of the ways in which it can happen. They won't be the only way, and there'll be there's some quite interesting things about how you can incorporate Bitcoin within the collateral used when getting a mortgage on a property, or that kind of thing. So there's some quite interesting ideas, but there's going to be tons of innovation over the next few years, all trying to work out how do you get that monetary premium out of these asset classes and into Bitcoin. And so Bitcoin Treasury companies are really the first proper iteration of that. And that's because they can tap into the equity markets and they can tap into the debt markets, but it's really early, slightly more advanced for equity than debt, but it's still very, very early for both of those. And some of those Bitcoin treasury companies are going to be built robustly to last decades. And some of them are just going to be jumping on a bandwagon, built, just a sign on the door almost, and they're going to collapse the first time someone tries to, or they're going to claim they buy Bitcoin when they don't, or they're not going to do things in a serious way. Because this is serious. This is a lot of money in these markets, and at the moment, that money, that value is going to be pushed through what is a relatively small number of these companies. Many more will arise, I think. And so it's important that those bridges are built robustly and taken seriously. But that's sort of my synopsis for where we are on Bitcoin treasury companies.
Yeah, I would completely agree with what you've said. Especially in the UK, we use our houses as a saving vehicle, it's always one of the favourite things that financial advisors face, which is, where's your pension? And they're like, oh, my house is my pension. Like, okay, you're aware that can go down. Like, it doesn't have to maintain its value. And it's also quite scary, right? You've got to move. All the other houses go up relative to the price of yours. So to realize that equity, you've got to downsize it. It's fraught with issues that people don't think about. Bitcoin treasury companies are a really interesting one. 2025 has definitely been the year of Bitcoin treasury companies. For those that don't know, MicroStrategy, formerly MicroStrategy, were the first. They adopted a Bitcoin treasury strategy in August 2020. The reason being that MicroStrategy was competing with Microsoft, but they weren't really competing. They were a tiny competitor. They'd been in business for 30 years, and the founder, Michael Saylor, looked at his assets and he said, I have a business that's doing sort of, I think it was 5 billion a year in turnover, but compared to Microsoft, that's nothing. And he had 500 million in the bank, and he was like, this is 30 years of work for me. And he was looking to sell the company. He was going to sell and retire. And then he found Bitcoin and just said, right, final throw of the dice, let's see if we can do something to compete with these big boys. Put that money into Bitcoin in August 2020. Obviously massive run up during 2021. Valuation of his company drastically changed, and then he has essentially built a flywheel where he is able to buy Bitcoin, keep it on his balance sheet. He's buying it at very cheap debt. I think in some cases 0% interest, like 0% coupon on the debt. And he's now launched 3 or 4 other products where he's coming for, I think, just general sort of checking account, government bonds, that kind of thing. I'm actually not too au fait on that. It's on the to-do list, is to get myself up to speed on all of those additional products, write a PDF, and then give it to financial advisors for free. I've now said that's going public, so that is something I'm going to have to do. But as a consequence of their success, and just so we're clear, since August 2020, MicroStrategy's share price has performed 3 times better than Nvidia's. So if you think Nvidia has done well, MicroStrategy has done 3 times better over that same period. And that's led to a lot of people coming into this space. Some, if I'm thinking of, none of this is financial advice, disclaimer at the beginning, but just to repeat. But if I think of the likes of Smarter Web in the UK, H100 in Sweden, I think it's Capital B in France, Metaplanet in Japan. These guys seem to be the good guys, relatively transparent. They've built a flywheel that works. But then there are others who, as you say, are, kind of just putting a sign on the door saying that we're Bitcoin treasury companies, but they're not really. They haven't figured out a flywheel. They've kind of jumped on the bandwagon. So the critics of Bitcoin treasury companies, actually, before we do that, do you want to just cover off is there anything I missed there in terms of their flywheel, how they work, how they operate?
Hey team, just a quick pause to say a huge thank you. You've given us your most precious assets, your time and your attention. And honestly, it means the world to us. If you've enjoyed this episode or you take value from these conversations, it would really mean a lot if you could like, comment, or subscribe. Those things really help the algorithm and they help the channel to grow. And if there's someone in your life who would take value from this, maybe a fellow advisor or someone just curious about Bitcoin, please send it their way. You never know what it might spark. Okay, back to the studio.
So I think so one of the key differentiators is that what we're talking about here are companies who are aggressively adding Bitcoin to their balance sheet. So I wrote an article where I think the numbers were wrong in hindsight, but I said 0.1% of companies out there. When did I write this? Back in June, I think. It'd be on the Cartwright website somewhere. So what it was describing this monetary premium and this leakage of value out to Bitcoin, and it was saying that 0.1% of companies will become Bitcoin treasury companies where they're aggressively adding Bitcoin to the balance sheet. 99.9% should focus on how Bitcoin can be integrated within their business. Now, they may just add a little. They don't need to tell the world about adding 5% of Bitcoin to the balance sheet, but they're doing it for the right reasons. And then they should also be thinking about these other ways, like merchant payments or paying staff in Bitcoin. There's other ways in which they can incorporate Bitcoin wherever money touches their business, essentially. That sort of plan B that might quickly become a plan A we talked about earlier. But we're focusing here on what I said then was the 0.1%, but I think could end up being low single digits in reality. That's who we're specifically talking about, and I agree with you. There are going to be some that work and some that don't. I think we're starting to see the version 1 was really where they said we're just going to issue equity and maybe some debt and buy Bitcoin with it. And actually, the operating company wasn't really relevant or wasn't very big to that central theme. However, I think we're now moving into version 2 of the Bitcoin treasury companies, which is where the operating company actually, it's a different type of flywheel, right? So it's actively involved in supporting the Bitcoin ecosystem. We are building a monetary system from scratch since 2009. There's a huge amount that needs to go into that, and how, because it touches every part of our economy, and therefore these operating companies on these version 2, I think, are going to be particularly focused on whatever their historic skills have been, applying them to Bitcoin, and then using those revenues plus anything raised from the capital markets to buy more Bitcoin and strengthen their balance sheet. So you've got that sort of thing going on. Right, let me pause there, and you were going to ask a question.
Well, yeah, I think you're absolutely correct in what you've said there. And actually, I think the only real threat to some of to a lot of the treasury companies is if a very, very large company, like let's say one of the Mag 7, decided that they were going to just use their operating business to start aggressively buying Bitcoin. I think that's a threat. But you're right in that, the first round issuing debt, V2s, V3s, we'll see what happens. So some of the critics of Bitcoin treasury companies will say, I mean, issuing debt to buy a volatile asset like Bitcoin is dangerous. There's going to be margin calls. There's going to be, the points at which people call in their debt and say, Bitcoin is now, let's say it drops to $50,000 a coin. Let's say it drops to $10,000 a coin. People are going to start calling in those margin calls, and you're going to see this cascade event. That's first one. The second one is I've read an article that I didn't fully understand, and I really need to reread it, which is likening Bitcoin treasury companies to a certain product that was launched just before the Great Depression, just before the stock market crash in 1929. And I've forgotten what it was called, but it was essentially a fugazi. It was, it was nothing. It was built on nothing, and it was just pure speculation. And people have likened those products to Bitcoin Treasury companies now. What are your thoughts on that?
Right, do margin calls on the debt first. So it depends on the debt. So first of all, a lot of these companies don't have any debt. So in that sense, it's a non-issue. They're only buying Bitcoin with capital raised from the equity markets and operating profits. And therefore, the worst case scenario for them is as long as the operating company continues to operate. So ideally, it's in an industry which is not. We talked about how it should be supporting the Bitcoin ecosystem, but I suspect it'll do more than that, and therefore it adds some diversification. Then they can just ride through. Let's say we get a bear market tomorrow, they can just ride through that, just hold on tight through that bear market. And so that mindset is very similar to anyone who's been through one or more historical Bitcoin cycles, is know what you own. And it may or may not. It is different for a Bitcoin Treasury company because there are different risks. It's like holding a gold mining company compared to gold itself. I think that is an important point to make actually before we go any further, is that a Bitcoin Treasury company is not Bitcoin. I think everyone should have a very solid position in Bitcoin first, and if they've got trapped capital, if they have the risk appetite, then absolutely they should be thinking about Bitcoin Treasury companies. But make sure you've got that solid foundation of proper Bitcoin first. Right. So then, but there are some companies, so like the like Strategy and some others. So they are taking out debt, but from what I've seen, it is longer term debt. So it's not like it's not like it's it's not like they're leveraged on one of these betting websites or something like that, where the second that the price drops, it can liquidate your position. It's not that kind of debt. It might be 1, 2, 3, 5 year debt, in which case you can ride out some of the interim volatility. Now, if Bitcoin falls a lot and it coincides with when you need to make that redemption payment, that could give you some issues. But so it's more like taking out a mortgage on your house than it is trading on a trading or betting website. So if you paying your mortgage and you have a few months out of work, as long as you've got some savings, you can still pay your mortgage. I think that's the principle. The Fugazi, I don't know. I don't recognise that, but I don't think so. I think where this possibly comes from is that if you like, there's sort of two levels of risk here. So you're buying at. So there's something called the MNAV, which is a bit of a technicality, but essentially it's the ratio of, it's like the M stands for multiple, and NAV is the net asset value. So if you forget the operating company for a moment, because that blurs things slightly, you've got the market cap of the company, so however many pounds that is, and you've got the current value of the Bitcoin Treasury, whatever pounds it is. And the MNAV is the multiple of so it's the market cap of the company divided by the market value of the Bitcoin Treasury. And so what we've seen for most of the past few months has been that MNAV has been above 1. And so the market cap is higher, and that's there because it is possible for the company to sell equity at this level and buy Bitcoin at this level and effectively a discount on the Bitcoin it buys. And over time, that gap may well close, but it seems to be reliant on the market's confidence in continuing those Bitcoin purchases. And it's a little bit circular, because when the confidence drops, the MNAV comes down, making it more difficult to be as accretive to shareholders from going through that equity capital raising. So you've got two levels of risk. If we look at the share price, you've got the first level is the difference between the market cap and the Bitcoin Treasury. And so that is essentially sort of what confidence do investors have in that the company will continue to accretively buy Bitcoin. And there's logic why it should be this gap and not zero. But, that's something for investors to think about. And secondly, you've got the lower level, which is the difference between zero and the Bitcoin Treasury. And the risk there is that the Bitcoin Treasury company is not properly securing the Bitcoin. So people who are buying into these treasury companies, they've got, I don't know, I guess they have different levels of knowledge and understanding of Bitcoin, but they're doing it because they want Bitcoin exposure. And so if Bitcoin falls to zero, that was a risk that they factored in. So they're very confident it won't, or they've factored that into their overall portfolio risks. And so the Bitcoin price falling to zero is like a known risk. I think the more difficult risk is that Bitcoin held and secured properly? And my concern is that we'll see over the next few years, we'll see a Bitcoin treasury company, maybe more than one, where they've just, either they've not fully bought the Bitcoin that they said they would, or they've just done it in a slightly cack-handed way, and it turns out it's not all there. So I think that's incredibly. So if you look at the Fugazi sort of argument, they say, well, as long as the Bitcoin is secured properly, the worst that happens is the MNAV falls to 1, and you're still left with the Bitcoin. And then it looks like,
or below 1. I mean, some of them recently are trading well below 1 in terms of their MNAV.
Yeah. So you could argue that they should be selling their Bitcoin and buying back the shares, because that would also be accretive to shareholders. I don't know. Well, let's not get into specific names, but I think that's the market does seem to be testing that thesis. Are these companies going to sell their Bitcoin and buy back shares, or are they going to just try and hang on? Anyway, that's an interesting. That needs to play out.
Yeah, and we actually saw, literally this week, I think we saw our first treasury company sell some Bitcoin.
Yes.
And Michael Saylor has obviously said strategy will never sell. He's been very public on this, and to never sell your Bitcoin. But we are seeing other treasury companies not replicating the exact strategy. I hate that they've MicroStrategy. So yeah, I mean, it's going to be very interesting in terms of how this plays out, because people are going to do it differently. People are going to have more confidence in some other than others, leading to expanded MNAVs versus compressed MNAVs. Also, will we actually see wider markets accept MNAV as a metric? Because at the moment, the market really doesn't care about MNAV, right? It's Bitcoiners that care about MNAV. The market has shown very comprehensively, especially in the last month, we don't give a shit about your MNAV. Like, we will push your share price below 1 MNAV. We don't care. So yes, it's going to be very, very interesting. What have I not asked you about Bitcoin treasury companies that I should?
I think so. I mean, maybe if we just look further ahead with how these things could evolve. So I think we're going to get a lot more coming through. I'm aware of some from my conversations, but I'm sure there's plenty more above that. I suspect we'll see over the next few years, we'll see the failure of some, we'll see the consolidation of some. If a firm is sitting there with an MNAV below 1, they're ripe for, apart from anything else, an acquisition, to be acquired. you're effectively buying Bitcoin at a discount. So depending on what else that company comes with. So I expect this to develop quite a lot. I've talked about version 2s, version 3s or 4s might be where we have the cash flows to investors are essentially the equity tends to be zero dividends. The bonds can be zero coupon, or sometimes they do come with some kind of coupon, but it's not yet at the point where it's tailored towards specific investor needs. So if we look further out in time, there's certain cohorts of investor out there that might want, no coupons for 10 years, but then they're retiring, and then they'd like coupons for the next 20 years. How can that be done? Are they going to, at the moment they have to pay in fiat, but at some point they'll start paying in sats. We'll start to see, I think, funds that are. How do people get exposure to these? Well, you obviously can buy them on a stock by stock basis through certain accounts if they allow you. But I think it will become natural for, we're not quite there yet, but these large investment funds to include an allocation. It's a great way to get a little bit of Bitcoin exposure, try and help them to rise up a little bit more volatility possibly in their fund, but help them to rise up the league tables. Also, maybe at some point we'll get specialized funds that are focusing. I mean, there is one in France, but I don't think you can get access to it over here. So we'll maybe see them start to pop up, because going back to what I was saying earlier, this is different to Bitcoin. This needs from an institutional investing point of view, this needs a stock picking approach to make sure that the right ones are chosen to invest in, sorting the wheat from the chaff, and also within that wheat, making sure there's diversification. So it could be diversification of, we've talked about there are going to be different approaches to doing it, different types of operating company, maybe, all these kind of things. So that's some of the developments we might see.
Yeah, I'm just having the idea of an index fund of Bitcoin Treasury companies is quite attractive, rather than having to stock pick. If you just put together a fund that says, look, we've got MicroStrategy, MetaPlanet, 8 to 100, essentially the market leader in every jurisdiction.
If there's some level of due diligence which goes into, effectively it's a form of active passive smart beta. If there's some level of DD which goes into how that index is formed, then maybe that's got legs. I think just buying everyone that exists is probably not the best approach. Like, you wouldn't buy every gold miner. You'd have some level of stock picking to find the quality.
Yeah, absolutely. Look, it's going to be very exciting for Treasury companies. I am a personal investor in a few, and will be a larger investor in a few more. I personally think we have a dip in 2026, so I'm looking to execute, Q3, Q4 2026. I'll be buying a lot of Treasury companies. Always do your own research. They are essentially a leveraged play on Bitcoin, which is already highly volatile. So don't trust, verify, do your own research. Sam, we're out of time again. It's been an amazing conversation.
Make sure you've got enough Bitcoin as well. First of all, a couple of quick things. So,
sure.
We're actively looking for Bitcoin Treasury companies to help with their exchange and custody, so we can help on that side. We're actually looking for fund managers to try and help to facilitate the acceleration of these companies being adopted more mainstream. So any fund managers out there that want to have a chat, and then we can try and coordinate to some extent. And then also we're about this, going back to that monetary premium moving to Bitcoin. We're trying to talk to as many local councils as possible, because there's a fantastic opportunity to essentially embed Bitcoin within some of their debt structure, which could save, across the UK, could save £3 to £5 billion per year of local government, and local governments are under huge financial pressure at the moment, and that might bring some of them back from the brink. So keen to speak to local authorities of any political party, although some seem to be more advanced in their thinking than others on this.
Mention no names, but yes. Okay, yeah. If anyone's listening or watching and can help Sam with those, don't hesitate to reach out. Sam, where can they get hold of you?
So get me through LinkedIn, get me through the Cartwright website. Just come through our normal inquiries at cartwright.co.uk, and it'll find me.
Perfect. Thank you, Sam.